Well, hello, and welcome back to you, Principles of Accounting 2. I'm your host, Dr. B. We are currently in week 3. Uh, a few quick notes. Uh, Last week, you had your first real discussion board, um, and you had your Chapter 17 quiz. You had Chapter 17 quiz, and you had a Chapter 18 discussion board. For some reason, some of you still are not participating in the discussion boards. So quick note on that. Discussion boards are worth 5% of your total grade each. Okay? I'll say that again. Discussion boards are worth 5% of your total grade each.
Do you
Okay?
see me, Professor?
I can see you, buddy. So, so if you do not complete discussion boards, you lose 5% of your total grade. There are 4 discussion boards in this class. That is 20% of your total grade. That means you will for sure probably fail the course if you don't participate in each discussion. So, if you didn't participate in this past discussion, you lost 5% of your total grade. If you don't participate in the future ones, you'll definitely fail the course. So, participate in the discussion boards. It's not that difficult. You go in, you type a paragraph responding to the question, and then you respond to 2 of your classmates. I'm not asking a lot from you, but I am asking you to do the work. If you don't do the work in the class, you will fail the class. So please, yes, participate in the discussion boards. Otherwise, you'll fail the class. Very simple. Do the work, you'll pass. If you don't do the work, you'll fail. It's really that easy. So, yes, this is an 8-week course. There are 2 assignments in every single week, and you know that. Last week you had Chapter 17 and Chapter 18 discussion board. This week we got Chapter 19 quiz, Chapter 20 homework. Every single week there's 2 assignments. You miss one, you missed 5% of your grade. If you miss enough of them, you'll fail the course. Don't miss anything. Do both assignments in each week. If you do both assignments in each week, you might pass. So do them. Please. I can't emphasize that enough. The only way you'll fail is if you fail yourself. Yeah? You don't do the work, you don't pass. Period. Very simple. Do the work. Okay. I apologize about the rant, but for some reason, 8 of you didn't do the discussion board. So 8 of you are currently in jeopardy, yeah? Do the discussion board. Do them all. Please. You can only help yourself. Okay, my apologies. Sorry about the rant. Sorry about the attitude. I want to get my point across. How important it is for you to do the work in every week, every time, for both assignments. Everything is worth 5% of your grade. You need to do it. Did I grade it yet? No, since it just closed on Sunday night, I haven't had a chance to grade it yet. I'll grade it probably tomorrow. But thank you. Thank you for asking the question. I'll get to it, I promise. Okay, sorry about the rant. Do all the work. It's really that simple. I know it's a lot of work. Yeah, it's a lot of work. Absolutely it is. You know, I'm asking you to do a lot of stuff in this class. Two assignments a week, it's a lot. But you got to remember, this is only an 8-week course. We're condensing everything you would learn in a full 16 weeks into 8. So, you know, we're double up every week, right? So, again, apologize about the rant. Just want to get my point across. Okay, so let's go ahead and jump into it. Today we're going to cover chapters 19 and 20. Chapter 19, we're going to talk about joint cost allocation and support departments. As I had said at the very beginning of Principles of Accounting 2, you want to have the mindset of a manufacturing company. In a manufacturing company, we are faced with a lot of different types of costs and organizational structures. Just as we learned about in earlier chapters, we discussed the idea or concept of departments. We also talked about this thing called support departments. Support departments are the departments that support the business organization as a whole. An example of a support department would be human resources. Another would be the accounting department. Another would be the maintenance department. These are support departments that support the entire organization. The IT department is another support department. Joint costs are costs that are joint. They're closely related with the operational departments and the support departments. We'll talk all about those. So a support department is a department that provides support to departments that are in the production process. An example would be the maintenance department. They support the assembly line in the assembly process. Maintenance is there to support them by maintaining the machines. So therefore, maintenance is a support department. When you hear the word support, think a department that is supporting the production process. Right? That's the idea behind a support department. Support departments are sometimes called service departments. So a support department can also be called a service department. They provide services to support the organization. Support departments are usually accounted for as a cost or responsibility center. We'll talk a little bit about that here in a second. Direct costs for the support department are direct costs for the support department are accumulated in the cost center. What do I mean by that? As the maintenance departments provide support to the production, they accumulate costs. And those costs are assigned to a cost center. A cost center is the related pool of costs for that support activity. Support departments are indirectly related to the production. They support production, but they're not hands-on with the products, right? So, because of that, it's difficult to assign the cost to any particular product. So we kind of classify it as overhead. And because we classify it as overhead, it is allocated to its own cost center. So what we do is how do I want to put this? For support department costs, we allocate them into the product costing system as being an indirect cost, right? That's because remember, support means they support the operation, they support the the department that is actually doing the manufacturing. Support would be like maintenance, human resources, accounting. Those are support departments. They're not directly involved in the manufacturing process, but they support the manufacturing process. How do we allocate these costs, these support costs? Well, we allocate the support cost to overhead because it's an indirect cost. Overhead, factory overhead, is allocated through three different methods. Okay. The first method is called the single plant-wide rate method. And what this method does is we take the budgeted factory overhead for the year and we divide that by the planned production rate. And that helps us to allocate the hourly overhead rate to our product cost. We'll talk more about that in the next few minutes. The second method of allocating overhead is called the multiple production department rate method. I know, right? Sounds long. It is. Think of an organization that has multiple departments in the assembly process or the manufacturing process. You have the fabrication department, you have the assembly department, you have the paint department, so forth and so on, right? Those are multiple departments. And what we do is each department has a budget for factory overhead for the year. And we take that budget for the factory overhead for the year and we divide it by the allocation base. And then so each department has their own overhead rate that they apply to the production process. And the third most commonly used allocation method for overhead is called activity-based costing. With activity-based costing, instead of using departments, we use like activities. What does that mean? Instead of having the fabrication department and the assembly department, we have the how do I want to put this? We have the activities that are related to those departments. For example, we have the setup activity. We have the there's a bunch of activities, right? An activity is the actual process of doing it, right? And each activity is allocated a budget for factory overhead, and we divide the budget for factory overhead for each activity by the allocation base. And those get transferred to the cost of the product. So those are the three methods that we'll talk about. So the single plant-wide rate method, we take the entire overhead, factory overhead cost, and we divide that by the activity base. An activity base could be something like labor dollars, direct labor dollars, direct labor hours, machine hours, miles driven. These are all what we call activity drivers. An activity driver or a cost driver is the base for the respective activity. So what this process does, the single wide plant rate method, is it applies the same factory overhead rate to all products. Now, that method is the easiest one to do. Okay, you just simply take factory overhead budget divided by the activity base. Very simple calculation. You just apply that to all the products the whole company makes. That's easy. That's a positive part. But the negatives are it ignores the fact that there's different products that have different costs associated with them or take different times to assemble. So therefore, it's not the most accurate method. And so what do we do? We take the total overhead cost divided by the activity base, and we apply those to all products. Now, with the multiple production department rate, this is a little bit more accurate because we apply the overhead costs based on the respective departments. Okay. For example, we have a company that has a fabrication department and an assembly department. And each department has their own budgeted factory overhead. And we take that budget and divide that by the activity base. Through this method, we know that each department will have their own overhead rate, which is a lot more accurate for allocating factory overhead. Hopefully a lot of this is sounding very familiar. The same concept is used for support departments. So we have a total budget for factory overhead. Within that total budget for factory overhead, we have a portion of factory overhead allocated to the production departments, fabrication and assembly, and then each department applies that rate to each product that is manufactured by the company. Okay, that makes sense. We learned about that. What's new here is that we also apply a portion of the total factory overhead to support departments. And those support departments allocate their portions of factory overhead to the production departments. The third method that we know is called activity-based costing. And this is used where we apply budgeted factory overhead for each activity to the process, right? So we have the assembly setups, we have inspections, we have purchases, we have quality control, we have assembly. These are all activities, yeah? On these activities, we assign a budget for factory overhead and we divide by the activity base to get the activity cost per unit. And with that, we're able to allocate the respective overhead, right? And in that process, we receive a certain amount from our support departments, which is seen here. So we have the application of total factory overhead to each activity that gets applied to each product. Hopefully this all sounds very familiar. We also apply factory overhead to support activities. Those support activities are then allocated to the respective production activities. So what this does is it helps us to assign, distribute, apply, and allocate the support departments to the manufacturing costs. Again, it's indirect, right? The idea behind support departments is those are indirect costs. The indirect costs still receive a portion of factory overhead, and of course we know that the factory overhead needs to be allocated to the manufacturing departments or manufacturing process. And so in transferring the factory overhead costs to the support and production departments, we call this distributing overhead costs. When we transfer those costs and apply them to production or to products, we call that the application of costs. And the application costs are used in a number of different ways. Well, what are those number of different ways of allocating support department costs to the production departments? There are three primary ways to do this. One is called the direct method. Direct method is very easy, but it's the least accurate. Okay, think of the direct method like the single plant-wide rate method that we learned about earlier for allocating factory overhead. Works the same way. It's very, very simple. Okay. The second method for applying support department costs is called the sequential method. It's a little bit more challenging, but it's more accurate. Very similar to the department rate method that we learned about with allocating factory overhead. And the third method for allocating support department costs is called the reciprocal services method. This is the most difficult, but it's the most accurate. It's kind of like the activity-based costing method. That's why, we just talked about, you're like, Dr. B, I know that we've already learned about single plant-wide rate method, multiple department method, activity-based costing. We already learned that stuff, so why are we covering it again? Because it's related to the application of allocating support department costs to the production departments. So, step one, we allocate the overhead costs to the support departments and the production departments. Step 2 through 5, we allocate the support department costs to the production department costs. And in step 6, we're allocating the production department costs to the products. So we can see that the total cost of a product, as you know, direct labor, direct materials, factory overhead, that factory overhead part includes both support department costs and production department costs. Using the direct method, we can allocate the costs of human resources, accounting, medical, I don't know why medical aid's on there, but I guess that could be a department. Human resources, accounting, maintenance, janitorial services, medical services, whatever. these are all support functions, right, for the business. We can allocate these to the production process through simply taking those costs and allocating them evenly across the production process. The thing is, this method is not very accurate. It's easy, but it's not very accurate. So here's an example of it. We have a company that manufactures tables. In the production process, we're cutting the wood and we're assembling the tables. Very straightforward. That's our production method for building tables. Within our company, we have janitorial services and cafeteria services. That's nice. Those are, of course, support services for the company. We know that those services are allocated some overhead, and we know that the production process is allocated overhead as well. So here are our allocations, our costs. Janitorial cost $310,000. Cafeteria department cost $169,000, and it's expensive. The cutting department allocated $1.5 million for $4,000. And the assembly department allocation is $680,000. So now that we know our allocated costs, we move into step 2, which is to determine the appropriate cost driver. For the janitorial department, the cost driver is the square footage to be serviced. So janitorial, what they do is they clean the assembly line, right? Or the warehouse, whatever. The square footage of that assembly line or warehouse is the cost driver for the janitorial department. In the cafeteria, the cost driver is the number of employees working in the cafeteria, or the number of employees being serviced in the cafeteria, right? So that's step 2. We've allocated our cost drivers. Step 3 is that we need to find the usage of those respective departments, okay? So we said that square footage is the cost driver for janitorial, and the number of employees is for the cafeteria. Okay. So let's take a look. For the janitorial, that department square footage is 50. The square footage for cafeteria is 5,000. The square footage for the cutting department is 1,000. The square footage for the assembly department is 4,000. The number of employees in each department, I have 10 in janitorial, 3 in cafeteria, 30 in cutting, and 10 in assembly. So those are my total number of employees for each department, and total square footage for each department. So that's step 3. Step 4 is we find the percentage usage for the support department's cost drivers by the production department. How do we do it? You might be asking. To find the percentage, we take the square footage, okay, as a cost driver for the janitorial services of each department. Cutting department is 1,000 square feet. Assembly department is 4,000 square feet. And we divide by the square footage for both the cutting and the assembly department. You might be asking, well, why would we be dividing by both departments? Well, think about the activity, okay? The cutting department and the assembly department are those are considered the manufacturing departments. Janitorial services covers both departments. So we take each respective department, divide by the total square footage. So 1,000 square feet for the cutting department divided by 5,000 square feet total for both cutting and assembly departments. 1,000 divided by 5,000 is 20%. So we allocate 20% of janitorial services to the cutting department. The remaining 80% is allocated to the assembly department. Assembly department square footage is 4,000 square feet divided by the total 5,000 square feet for the total manufacturing departments. Dylan, excellent question. So Dylan asked, so we should always allocate the costs of the support services to production departments only. Yeah, yep, that's the idea, exactly. So, for example, we have, in our example that we're looking at right now, we have janitorial services and we have cafeteria services. The idea behind allocation is we take the support services and we're allocating it to the production departments because, as we saw earlier, the cost for the support services get allocated to the products indirectly through the production departments. Does that help to answer your question, Dylan? Hopefully.
That does help. Thank you.
Awesome. Thank you so much. Thanks for the question. So, I'm sorry. Where was I? So within step 4, we found the percentage of janitorial services for both the cutting and assembly departments, 20% cutting, 80% assembly. Okay. Now, we need to determine the percentage based on the number of employees. So as we said earlier on, we have two cost drivers. Okay. Square footage for janitorial, number of employees for the cafeteria. We can also see the number of employees for the cutting department and assembly department. 30 in the cutting department, 10 in the assembly department. We first found the percentage for cutting and assembly based off the square footage. Now we do the same thing based off of the number of employees. For the for janitorial services for the cutting department, we have 30%. 30 employees in the cutting department divided by a total of 40 employees across the both production departments. So 30 divided by 40 is 75%. The other 25% is going to be allocated to, you guessed it, the assembly department. In the assembly department, we have 10 employees. Divided by 40 employees total across all production departments. 10 divided by 40 is 25%. And we're saying that that's for cafeteria services. So cafeteria services, the cost driver is the number of employees. And you can do the same thing for the janitorial employees, right? So janitorial employees, we have janitorial employees, we have 10 employees. We have 40 employees total across both service departments. And we have 3 cafeteria employees. The way to think about this process here is you take the total number of employees for each respective department and we divide that by the total production department employees. So 30 divided by 40, 75%. 10 divided by 40, 25%. And you can do the same thing for both janitorial services and cafeteria services. And you'll end up with the same results. Regardless of how it's devised, you should always end with a total of 100%, right? Meaning 100% being allocated of your services being allocated to the production departments. And then the fifth step is we multiply the percentages being used by the total support department costs. So what does that look like? We take the percentages used by, multiply that by the respective department costs. If the cutting department allocation of factory overhead is 310,000, let's go back. 310,000 total for, I'm sorry, 310,000, you want to allocate it for each department cost. Janitorial department has total cost of 310,000. The janitorial services both the cutting department and assembly department. 310,000 times 20% for cutting, 310,000 times 80% for assembly. 62,000 is allocated to cutting, 248,000 allocated to assembly to add back up to your 310. What this shows us is how much is being allocated to each production department. So what you do is take the total amount allocated for janitorial services times the percentage used in each production department. And then when you add those production departments back up, it should equal the total amount for the support department being utilized, in this case, janitorial services. And then we would do the same thing for our cafeteria. Our cafeteria, we said 75% being used for the cutting department, 25% being used for assembly. Take your cafeteria budget, 169,000 times 75% for cutting, times 25% for assembly. And when you add both those back up, it should equal the total amount budgeted for a cafeteria. Does it make sense? Are there any questions so far for the direct method? Remember, this is the easiest method. I know, right? Okay. Okay. How do we find the total allocation for each production department? What we do is we add the steps up. Okay. For the cutting department, total overhead was 1,504,000. That's step one. Yep. Plus 62,000 allocated from the janitorial department, I think? From 62,000 from janitorial plus 126,750 from cafeteria equals 1,692,750. So you see how that works is you first start with, follow the steps, of course, but step one is the allocation for the overhead for the cutting department. Okay? Then you add in the allocation from each service department that supports that respective production department. So 1,504,000 from the allocation for cutting department, plus service department janitorial, plus service department cafeteria, equals total allocation. Need the same thing for the assembly department. Allocation, 608,000 plus 248,000 from janitorial plus 42,250 from cafeteria equals the total amount allocated, 970,250. Good so far. See how we got there? That's the direct method. Here's how it looks in a what's the word I'm looking for? Here's how it looks in a graphical form. Your driver was square feet and number of employees. Those were your cost drivers. You had your respective department costs. Those respective department costs, that was the bit we call the base, right? Then you add in your support departments that get allocated to your production departments, and you add all of that up. Makes sense, right? Yeah? Okay. Just want to make sure you're all good. You understand this concept. All right. So that was the first method, the direct method. Now, let's move into the second most difficult method. This is known as the sequential method. Oh, okay. So the sequential method, here's how it works. We allocate costs among interdepartment support departments. Ugh. I know, it sounds crazy already. The way it works is it's like a step down approach. Department A goes into Department B. Department A and B go into Department C. Departments A, B, and C go into Department D. And then Department D gets added to the other production departments. With me so far? I know. This method's kind of a little muddy. In this method, the costs are never allocated back to the support department where the costs have already been allocated. In other words, once I take Department A and I add it to Department B, that cost never goes back to Department A. And so forth and so on. So once all my support departments are added up into the last support department, and then we allocate all the support departments over to the production, it never gets traced back to those respective departments. That's what that means. Using this method, what we do is we prioritize departments. Departments that have higher costs are prioritized first. Departments that serve a lot of other departments are prioritized second. And departments with more accurate cost drivers are prioritized third. Let's look at our example. Same example, but I'm showing you the sequential method, so you'll see how it's applied differently. There are 3 steps for this method. So it's a little easier than the easiest one in terms of number of steps, but it's more complex in terms of calculation. 3 steps. And they're very similar to the direct method, okay? Our cost drivers. We have square feet. We have number of employees, just like before. And we have department costs, just like before. So the first steps, just like we did in the direct method, we find cost drivers, in this case square feet. We find department costs. We allocate the support departments to the production department. But before we do that, there's a new step 4. Here's how it works. In step 4, we identify the proportional usage for each support department cost driver by the departments of which its costs are being allocated. Oh my goodness. I know, right? Okay, here's how it works. First, in step 4, we identify our departments. We have cafeteria, cutting, assembly, that are all serviced by the janitorial department. We'll do the same thing for cafeteria here in a second. Okay? So in other words, the support departments oftentimes support each other as well, right? I mean, the janitors aren't just going to clean the cutting and assembly areas. They're probably going to clean the cafeteria as well. I would hope, anyway. So for the janitorial department, the cafeteria is 5,000 square feet, the cutting department is 1,000 square feet, and the assembly department is 4,000 square feet. We can identify the usage based off of the square footage. So 50% for the cafeteria, 10% for the cutting department, and 40% for the assembly department. Now for the cafeteria. The cafeteria, which is my other support department, 5,000 square feet, cafeteria 1,000 square feet, cutting 44,000 square feet assembly. We can see that the cafeteria, based off of square feet, 50% to the cafeteria, 10% for the cutting department, 40% for assembly, follows the same thing that the janitorial department followed. The difference here is the cafeteria department does not consider the janitorial department for the obvious reason. The cafeteria department doesn't allocate the space that's used by the janitorial department because the janitorial department services the cafeteria, not the other way around. Once the support department's costs are allocated under the sequential method, it is not allocated to any other cost. In step 5, support costs are allocated to the other departments, just as they were when we did the direct method. Although under the sequential method, the total support department costs are allocated. They include the other costs that were allocated to support departments from other support departments. In other words, if you look back here, think of Department A under support as your janitorial department. Think of Department B as your cafeteria. It's top down, yeah? Janitorial department supports the cafeteria. That they both get added into a single support and then get transferred to production. So that's why in step 5, using the sequential method, we see that the costs do not get allocated to other support departments. That's the major difference between the direct method and the sequential method. So looking back, here's how it looks. Cafeteria department. The janitorial cost for the cafeteria department, janitorial cost total, $310,000. 50% of the janitorial costs are allocated to the cafeteria. That's $155,000. $155,000 is 50% of 310. Cutting department, percent usage is 10%. 310 times 10% is 31. Assembly department uses 40%. 40% of 310,000 is 124,000. We add all of those costs back together to get 310, which is the 100% of the janitorial department costs. For the cafeteria, 75% is allocated to the cutting department. 324,000 times 75 is 243. 25% of the cafeteria's cost of 324 is 81. 243 plus 81 is 324. That's 100% of the cafeteria. And now you can see how though the what do I want to say? Now you can see how both support departments are allocated to the production departments using the sequential method. And here's the summary. Square feet, cost driver, number of employees, cost driver, your department costs, janitorial and cafeteria, and how those costs are allocated to the cutting and assembly departments. Make sense? It's a harder method, so I want to make sure that you all understand this. You're all still with me, right? I know this is boring. I know it's boring. Still with me? Yes? Dylan? Thank you. Okay, now for the hardest one. Oh, the hardest one, I know. The reciprocal services method. This is the most accurate and most difficult to compute by far. Here's how it works. We have our support departments, services departments, whatever you want to call them. They share costs, and those shared costs are allocated to our production departments in a shared way. I know it's super muddy. So the first three steps are the same first three steps that we have in the direct and sequential methods. First, you allocate your cost drivers, square feet, number of employees, department costs. You got those down. Okay, those are your cost drivers. We have identified those. We've identified the department costs, and we've identified our departments. Great. Well, first three steps taken care of. The support departments support departments never allocate their own cost to themselves. That makes sense. Like, for example, the cafeteria is not like, oh, you know what, my department cost is $169,000. Where'd you come up with that? How'd you allocate that cost to yourself? It doesn't work that way. You can't do that. So, we'll talk about it. Step 4 in the reciprocal services method is that we proportionately use each support department cost driver by other departments to which the costs are to be allocated as determined. Craziness. What does that mean? What it means is we allocate the percentages used by each department. So this is where it's different than the top-down one, right? We see janitorial and cafeteria department usages. The difference here is that on the right side, we see janitorial department as being listed under using the cafeteria. That was not the case earlier. That was not the case in the previous method. That's the primary difference. Is that in other words, the word reciprocal means you give some to my department will give some to you. That's reciprocal. That's what the word reciprocal means. My department gives you some, you give my department some. That's reciprocal. And that's the primary difference that we see below. We see under cafeteria, we see janitorial department shows up. That was not the case in the previous method. But we still allocate the percentage being used. So square feet, cafeteria is 5,000, 1,000 for cutting, 4,000 for assembly. That hasn't changed for the janitorial department. 50% for cafeteria, 10% for cutting, 40% for assembly. We saw that in the previous method. What's different here is that in the cafeteria department usage, 20% being allocated to the janitorial because janitorial department has 10 employees. 30 employees in the cutting department, that's 60%. 10 employees in assembly, that's 20%. How did we figure these percentages out, are you wondering? Well, we took the number of employees for that department divided by the total number of employees. 10 divided by 50, that's 20%. 30 divided by 50, that's 60%. That's where these percentages come from. Same for the square footage. 5,000 divided by 10,000 total, that's 50%. 1,000 divided by 10,000 is 10. You see where we're going. The fifth step for the reciprocal method is that we allocate simultaneously among the departments. The word simultaneous means at the same time. This is done by using equations. Oh, equations. Oh, my goodness. I know, right? How dare we do math and accounting? Okay, so here's how it works. We allocate based off of these equations. The equations are very difficult. Don't worry, I'm not going to test you on those, okay? It's not going to show up in the final exam. But it's important that we understand how the reciprocal services department works. That's why we go through this exercise. The cost allocated from the cafeterias to the janitorial department, cutting and assembly, multiplied by the total cost. And the opposite is also true. So looking at the janitorial department, we have total cost for janitorial plus 20% or 0.2 times the cafeteria cost. Cafeteria cost is found by taking total cost of the cafeteria plus 50% times janitorial costs. Lovely equations, right? So if we look at janitorial cost total 310,000 plus 20% of the cafeteria's cost. The cafeteria's cost 169,000 plus 50% of the janitorial cost. You can also rewrite the equation. Oh my God, you guys are probably like, oh, math. I know. Doesn't that suck? That's the worst. Cafeteria costs 169,000. This is the fun part. Yeah, I guess so. 169,000 plus 50% times janitorial cost. All you're doing is rewriting the equation. Right? You get down to it, and really all you need to do here is just substitute the letter for the cost, right? And the easiest way to get around all this ridiculousness. But we can see it once you plug all of that data in, we get down to the total cost for the cafeteria, it's 360,000. How did we get to 360,000, you might be asking? Well, we know that we started with the 310. I'm sorry, with the 169. 169 plus the 50% times janitorial cost. And all you need to do is you add those two together to get to the 360. But you can also do it by substituting the cost, right? But this is crazy. This is crazy math. I'm not going to have you go nuts and trying to solve those equations. I just want you to understand the concept. And by adding in the values, we can see 310,000 the janitorial cost plus the 20% times the cafeteria cost. And you can see what we're doing here, right? It's just substituting it in. This is the easiest method. Okay. Don't go nuts like this. That'll take forever. I prefer this. And then we express them as percentages, just like we did before. We had them all on. Questions? Reciprocal cost. I know it's the hardest method, right? We're good? Okay. Again, I'm not going to test you on that. That's just too crazy. It's accurate. It's the most accurate method,
Hello?
which is nice. Yes, go ahead. Drew.
Is this chapter 19?
Yes, I believe so. Yeah.
Just checking.
Okay. Yeah. Thank you, Drew. Excellent question. Okay. In comparison, the reciprocal method is the most accurate out of the three. It's also the most complex to compute. If we look at the difference, this is where it gets interesting. We know that the total allocations are going for the support departments. We know that the total costs are the same. But as we allocate those support department costs to the production department costs, we can see the differences between each method. The direct method, easiest one to do, 1.6 million and change for cutting department, 970 for assembly. Sequential method, 1,700,000 and change, 885,000 for assembly. Reciprocal method, the most accurate method, 1,758,000 for cutting, 904,000 for assembly. We see that the total costs are the same for each, regardless of what method you choose. The difference is how accurate the respective costs are for each production department as we allocate the service department costs. So that's where it gets interesting, in my opinion. Okay. Now that we're out of those woods, let's take a look at some joint costs. This is the second part of the chapter. Joint costs are costs that are shared. That's what makes them joint. Joint costs are costs that are shared. That's the idea behind joint costs. We can see across stages that the joint costs in the manufacturing process get split off from the production cost. I'm sorry, the service department cost. We'll talk more about this. Allocating joint costs, we separate them out. We separate joint costs out to allocate them properly. And we can separate joint costs out a few different ways. Physical units method, weight average method, market value method, and the net realizable value method. Oh my goodness. There's 4 different methods for allocating joint costs. We'll work through each one. Physical units method. What this does is it allocates costs based off of the individual types of products. Okay. We can see it for this company is we have a pharmaceutical company that manufactures skincare products. Skincare products, this company has three different types of skincare products. We have skincare cream, shampoo, and liquid hand soap. Okay, great. As you might think, these three different products have shared ingredients or joint ingredients. Mud from the sea, other chemicals. These create the base for these three different products. Other chemicals, right? Yeah. So mud from the Dead Sea and other chemicals create the base for these three different products. It's very common to find similar ingredients in different products that are similar. So using the physical units method, we take direct materials, direct labor, factory overhead. We find those, okay? And we find the quantity for each product. Skin cream, 200 pounds. Shampoo, 150 pounds. Soap, 150 pounds. Pounds is our activity-based cost driver. We can take the total cost and divide by pounds to allocate the cost to each type of product. Okay, so we can also allocate it based off of percentage, as you might think. How do we get the percentages? We take the pounds for each product divided by total pounds. 200 divided by 500, that's 40%. 150 divided by 500, that's 30%. Okay, you take the percentage times the total cost, the joint cost, which are the total costs, to get the joint cost allocation for each product. Pretty straightforward method, very easy to use. Questions for physical units method? We're good? Next method is the weighted average method. It's exactly what it sounds like. It's the weighted average. We learned a little bit about weighted average some time ago. I think it was back in Principles of Accounting 1. We talked about the weighted average, but we talked about it from the perspective of inventory valuation. You remember? We talked about first in, first out, last in, first out, and average, right? It's similar. It works in a very similar way. The difference here, of course, is that when we talk about weighted average method, we're talking about the allocation for joint costs based on the averages for each product. Okay. And the way we do this is we take the weight factors times the physical units. So weight factors times physical units. Looking at our earlier example, we have 450 pounds for shampoo, 200 pounds for skin cream, and 150 pounds for soap. If we take the, and of course we're going to find the percentage, right? How do you find the percentage? You take it based off of out of the total, right? Split off quantity pounds. skin cream 200, shampoo 150, soap 150, it's total 500 pounds. The time weight factor. Time weight factor tells us how long it takes to create a pound, right? 1 for skin cream, 3 for shampoo, 1 for soap. That gives us the weighted pounds per mixing time. Okay? 200 pounds for skin cream, 200 times 1 is 200. Shampoo, 450. 150 times 3, 450. Soap, 150. 150 times 1, 150. Now we find the weighted percent of mixing time. Okay, how do we find this? You might be asking. Well, this part gets a little bit more complex, right? So let's take a look. To find the weight factor of 3 to 1 for shampoo and 1 to 1 for the skin cream. Okay, 3 to 1, 1 to 1 out of 5. So how does it work? 25% allocation to skin cream, 56% and some change to shampoo, 18.75% allocated to soap. Might be saying, oh, well, how do we factor the 56.25? Okay, so we got, let's see here, 150 to 3, 450, 450, 5, 56.25. Fun stuff, right? We then take that weighted percentage times joint cost to get the cost allocation. Again, one of the more complex formulas. Third method, the market value at split off. Market value at split off, we allocate based off of the total market value. Market value is, of course, we need to know what the market value is to calculate it. If the product is sold at a different price point, we use the sales price instead of the market value. This, as you know, sometimes our sales price is different than market value. So we take the pounds times market value. Pounds times market value gets you your total market value. Pounds times the sales price. Pounds times the sales price. Pounds times the sales price. You add up the three totals for the products. Get your total market value for the company. Once we've found the total market value, we allocate based off of the pounds times the estimated sales price, gets you your market value for that product. We then find the percent of market value times joint cost. To find the percent of the market value, you take your market value divided by the total market value. So 108,000 divided by 240,000, 45%. 72,000 divided by 240,000, 30%. 60,000 divided by 240,000, 25%. You take that percentage times joint cost to find the joint allocation base. That's market value. Fourth method, net realizable value. Net realizable value is the estimation of the sales price less any cost necessary to further process the product beyond the split off point. What does that mean? In other words, the base for the skincare products is mud from the Dead Sea and some other chemicals. Okay, that's the base to create those three products. If I process those ingredients further, I then am going beyond the split off point. In other words, if I add more ingredients, take more ingredients away to further process the product, I'm then changing the recipe, right? When I change the recipe, I'm changing the net realizable value. That's what net realizable value means. How do we find net realizable value? We take the formula of the sales price times quantity minus additional processing costs. Sales price times quantity. Sales price times quantity minus additional processing costs. Sales price for skim cream is $5.40. The quantity, is the quantity given yet? I don't know if the quantity was given yet. I thought it was. Sales price $5.40 times the quantity minus the additional processing cost. Okay, here we go. Sales price $5.40 times the quantity, 200 pounds, 108,000, minus additional processing cost, our example 0, equals net realizable value, 108,000. So quantity times sales price minus additional processing cost. That gives you net realizable value. And of course, we find the percentage of net realizable value. To find that, you take your net realizable value for each product divided by the total net realizable value for the company. 144,000 divided by 288,000 is 50%. So forth and so on. Once we find our percentages, we can multiply those times the joint cost for each for the total company. We can find the joint cost allocation. 50% times 233 is 116. Makes sense? Looking at the four different methods and comparing the four different methods, we see that we still arrive at the same joint allocation totals, right? The difference here is how the joint cost allocations are to each product using each method. Which one is the most accurate method, you might be asking? That's a good question. I would say it's probably net realizable value. I think that's probably the most accurate. Yeah, it's probably the most accurate. This market split off value is pretty accurate as well, depending on the type of products that the company's manufacturing. Weighted average, it's pretty easy to calculate. It's probably the most simple. Well, aside from physical units is probably the most simple. Weighted average, second most simple. Most accurate is probably going to be net realizable value, and that's what the comparisons tell us. Is salary a sunk cost? Ooh, good question. Salary is sunk cost. It depends on the salary. If it's a salary for a supervisor that is a production supervisor, that answer is no. That cost would be allocated through factory overhead. The definition of a sunk cost means a cost that cannot be recuperated. That's what a sunk cost means. It's a cost that cannot be recuperated. Where did that question come from? Where'd you see that?
Hello, Professor. I just see from the guide, like some internet.
You saw it from where?
It's not from book.
Oh, from the book. Yeah. Yeah, sunk costs are costs that cannot be recuperated. So salaries, it depends on the type of salary that it is. If it's for a production supervisor, we allocate it through overhead. If it's like a CEO, then it might be. It depends. It depends on the situation. Good question.
Okay, thank you.
You're welcome. Okay, we're almost done. Last part of this topic is called byproducts. A byproduct comes from a product that we process further. Okay, an example of this would be gasoline. Gasoline is a byproduct of refined oil. Refined oil is a byproduct of raw oil. Byproduct. It's like a product that comes from an original product. That's a byproduct. Byproducts from the base of mud from the Dead Sea and other chemicals, the byproducts are the products that are made. What was that one? Liquor distillation resulting from methanol. Yes. Yeah, exactly. That's a byproduct. That's right. Yep, good example. Okay, that is the conclusion of Chapter 19, Support the Department and Joint Allocation. Questions from the chapter? We're good? Okay, let's take a very short 5-minute break. Let's meet back here 12:40, and we will fly through the Chapter 20. Chapter 20 is a lot more straightforward. In Chapter 20, we'll be discussing cost, volume, profit analysis. In other words, break even. It's a very simplified chapter. It's one of my favorite ones, also one of the easiest ones. So please take a 5-minute break, stretch, go to the restroom, come back, get yourself a cup of coffee like I'm about to do, and we'll jump right back into it. So I'm going to stop the recording for right now, and then we'll start the new one for Chapter 20.